Good morning, viewers. As you can tell by the thumbnail, we're going to be talking about Crsr Gaming, kind of what I think about the stock. But first, we're going to get over my portfolio, kind of see what kind of moves I've been making, if I've made any moves. That way we can have full transparency on this channel. And then I'm going to start, kind of go a little bit in depth on Crsr Gaming and why I think this stock is such a deal and why basically it's free money out there if you're investing in this stock at these low levels right now. But first, I did hear through the grapevine that if you like and subscribe to this channel, that Crsr Gaming is going to start going up within the next couple of months. That is a joke. Nobody knows when Crsr Gaming is going to go up or any stock in that matter. But if you do enjoy this content, make sure you do like and subscribe. Help grow this small channel. Without wasting more of y'all's time, now let's get into the video. So first I want to go through my individual portfolio through Fidelity, which, I love the Fidelity app. Right now we're actually below $50,000, so $48,871.67. And this was recorded on the 4th of October, so yesterday when the market fell, like my portfolio fell 2.28%, which I think the market ended up falling like the NASDAQ like 2.4%, or maybe it was something like that. It was a pretty good dip in the market, which is what's needed right now for a lot of these high valuation plays. So go through the individual investments that I have. So, just to go ahead and shorten up the video, I haven't made any changes yet. But this week, if the stock market continues to downturn, I'm going to start buying heavy. So Chewy still own 100 shares, Crsr Gaming 330, Hyliion 324, Palantir 282, Planet 13 1500, Tattooed Chef 513, and then TrueLeaf 310 shares. So now I want to go over stocks that I'm really looking at buying. Some of these are new positions for me, and some of these are going to be adding on to current positions that I have. So the first stock, as you see right here, is SoFi Technologies. The stock, this is on the 1 month chart. The stock hasn't really dipped that much. It kind of went on a peak. Now it's downturning a little bit. But this is a company that's growing, triple digits, revenue, users, everything. And I am a SoFi user. I love investing in products that I actually use. I love the platform. I kind of see, where the software and services are going, and just the simplicity, everything that you need finance related is on SoFi, whether just everything finance related. And it's awesome. Everything's in one app, and they have a really clean app, which is what I love. So the next stock, it's not that popular. It doesn't get that many views on YouTube. I personally don't care about that, but it's Chewy. And Chewy is just an awesome e-commerce. I feel like this, for the pet industry, nobody even right now can compare with Chewy as far as their prices, even Amazon. And they're partnering up with vets and just all kinds of awesome stuff. As far as veterinarian or pet related products, I feel like they have a monopoly on the market right now. And then obviously I wouldn't be making this video if I can't throw in Crsr Gaming. So I kind of feel like this stock is getting hit a little bit because it's not one of these like super high growth, growing 200% a year like all of the past, since 2020. We've kind of been hearing a lot of hype, a lot of just everything out there in the market. And I'm going to show y'all why in this video today, why I think this stock is a solid buy. So if we pull up a 1 month chart right here, we can see on September 14th is kind of where it peaked out, and basically $30 a share. It could have ended a little bit lower today, but I took this screenshot when it was down almost 2.5%, $25.82. And now this is one of the best things that I love about Crsr Gaming is the statistics on the stock. So price to sales of 1.28 with, a company that's having earnings growth of 22%, a forward PE of under 17, so 16.67. So the margin of safety on this stock is insane. And not only that, this stock is in a market that is rapidly growing and essentially guaranteed to grow in at least the next decade which is the gaming slash streaming, industry in the United States or basically all across the world. Like, comment down below if one person thinks that gaming, streaming, or any kind of market like that is going to be lower in 10 years than higher than 10 years. So now I kind of want to go over the earning estimates of what and the number of analysts and what they're expecting of the company right now. So current year is $1.79 of earnings per share, and next year they're expecting $1.91, which is, a pretty good bit of growth as far as, the company's earnings. The company, which we'll get into in a little bit, has kind of suffered a lot of cost related to the products, which is kind of why the EPS has went down a little bit. And then revenue estimates is $2.15 billion for next year. And then at the end of this year, they're expecting $2.04 billion. So that would be, 5.5% growth from that, from a bad year going into a decent year, which I feel like those revenue estimates are kind of low, honestly. And if analysts are expecting, $2.15 billion, what do you think is going to happen whenever every single quarter, in my opinion, next year that the stock is going to beat? So let's say at the end of the year they came up with 2.23 or 2.25 billion. What do you think is going to happen to that stock after that? So now I kind of want to focus on North America because, I like talking about stuff that I have experience in. I am pretty decently big into gaming. I probably play, 5 to 6, probably about 5 hours a week, I would say. So kind of let's get into some of the statistics in North America, which is what I'm familiar with. So North America gaming market is expected to reach a compound annual growth rate, or CAGR, of 6.8% during the next forecasted period, which is 2020 to 2025. And so that means basically every year they're almost going to grow 7%, 6.8%. It's what these analysts are rating this as. So the rise in people of the region's affordability and the strong economic backbone, coupled with the latest technology, drive the growth of the market. Moreover, free-to-play and more mobile games are boosting the market growth in certain regions. So these are, this is stuff that Crsr Gaming isn't even getting involved in yet. So, they're a super innovative company. So, I could see 2 or 3 years down the road that they're even getting involved in that. So now this is a article on Seeking Alpha that I wanted to share with y'all. So Crsr Gaming, great business and great opportunity. Crsr Gaming has been beaten up, basically on Q2 when they reported earnings. This is kind of what they're talking about. So it missed on EPS, revenue, and rate of growth of the sales. So the primary factor that has caused the miss and shortages and the rising costs. So once that pressure abates, the pent-up demand for Crsr's product will resolve earnings, revenue, and growth issues that the company has initially, started to have this year. The fundamentals show Crsr is a relatively cheap buy in an overly expensive market, which we already somewhat got into that. And then later on in this video, if y'all stick with me here, we're going to kind of compare them to other companies that are in the same category or offer the same products. So for a company with the recognition of a popular and marketing leading product, participating in a sector that is expected to grow rapidly, the shares are cheap and offer a potential for solid, basically returns for long-term investors. So now we're going to kind of dive down into the price to sales ratio of, companies that are somewhat involved with Crsr Gaming. So as we just saw, Crsr Gaming, this is showing a 1.28 price to sales. Logitech, which is basically their main competitor, is at almost a 3. So they're coming in at 2.86. Razer, somewhat of a competitor, 1.29. So even still higher. We're not even going to look at that other company. I don't even know who that is, so I don't want to, talk about something that I don't know. And now gaming components and system or the gaming components and the system market itself. Corsair Gaming, were already stated, 1.28. Don't know that company, so not going to comment on that. Micron Technologies, which is kind of a popular stock, with a 3.29, and then Dell, everybody knows them, 0.78. Also, then again, they're not having near as much growth as Corsair Gaming. Go ahead and fact check me if you want to. So one thing we can see, this is what the article says, one thing that we can see with the growth gaming stock is to look at the price to sales ratio. Corsair Gaming has an extremely enticing 1.28. For a profitable company that has experienced double-digit sales growth and a price to sales of 1.28 is dirt cheap. To put this in perspective, this essentially means the company is priced at 1 year's worth of revenue, which is what a price to sales is, or 0.28 extra, than the whole forecasted revenue that they're going to have next year, which is dirt cheap. Usually in this category, if they kind of got over a 2.5% to 3%, then that I would consider that a little bit overpriced. Like, I don't feel like Logitech's that overpriced right now with how much growth they're still going to have, but it just doesn't compare to Corsair Gaming at the same time. So I can understand a low price to sales ratio for, this is the article once again, for a blue chip company, but not for the growth company in a hot market like Corsair Gaming. This is a strong indication that there's a significant upside in this stock. So if you made it this far in the video, I appreciate y'all watching this. If you do enjoy this content, make sure that you like and subscribe to help grow this small channel. And I hope y'all enjoyed the content that I provided y'all from a little bit of research and digging into Corsair Gaming, kind of some of the price of sales of their competitors. So I hope y'all enjoyed all that content. And so catch me back on the next video.